this year has, I guess you could say on one hand, it's played out exactly as a lot of people expected, given the ETFs have kind of given Bitcoin a boost. On the other hand, maybe not so much for everything beyond Bitcoin. And really excited to dig into, I guess, an update on your price calls on today's show. And we might as well start with Bitcoin since that's the one that people care about most usually. And just check in on your price call of basically 116K to 137K. You can call it 125 if you want a nice round number of what to watch for by the end of the year. Is that still kind of where you see Bitcoin going?
Yeah. Our price targets are not to spoil the punchline here, but our price targets are unchanged. Coming into this year, I guess just to fill people in who are new to our approach to the market and how we kind of uh, construct our price targets. There is a fundamental element. Obviously we start with Bitcoin because the whole industry kind of ebbs and flows with Bitcoin. It has historically, and even though there's a broader set of assets within the crypto market, we think that will continue into the future. And so, we just look at historical flows and historical levels of frothiness within the market. The metrics we use are realized cap, which is kind of the cost basis of the Bitcoin network, and it is a way to assess the aggregate inflows and outflows over a long-term basis. And then we capitalize that cost basis with an entity-adjusted MBRV multiple. And using a series of regression analyses, we can approximate the direction of Bitcoin based on historical trends. But certainly underneath all of that is a very in-depth quantitative and qualitative analysis of the macro environment. And without an understanding of the current macro environment, it's really tough to anchor a bullish view in around Bitcoin into anything. And so
Yeah.
fundamentally our bullish thesis was anchored in look at the liquidity environment in 2024 continuing to be palatable for liquidity sensitive assets.
Mm-hmm.
And so coming into the year, we had an environment where in our view, real rates had topped, whether that is resolved through nominal yields continuing to go up and inflation continuing to rise in lockstep, or through disinflation and yields eventually coming down. Our view was that the top in real rates was in. We also saw from a monetary perspective, the Fed had hinted, and we think in the near term will start to taper QT. Right now the Fed, even though we've had 3 consecutive hot inflation prints,
Yeah.
the burden of proof for the Fed is still on the hawks to prove that inflation is resurging, as opposed to the doves to improve that inflation is falling. And so really the important thing is that the next move for the Fed is still a cut. Even if it takes a very long time and we have to stay at, north of 5% Fed funds rate, that's
Yeah.
still on the margin, a dovish view from the Fed.
Yeah, it's kind of steady as she goes for the time being. And I mean, I guess as much as we've talked about the macro themes, there is still, of course, now as we hit Q2 here in the halving on the Bitcoin front, the halving theme for people who are maybe more attuned to, I guess, crypto narratives rather than the Fed narrative and macro narratives. And looking at that, I mean, you got a slide in here about kind of what could be spurred by that narrative. And really, honestly, I feel like the ETF overhang has kind of overshadowed the halving. But what do you make of, I guess, the catalysts if we are to get to 125? Obviously, less distance to go now relative to where we began the year, but still a pretty healthy distance to get to your price target. I mean, is it that you see kind of just a steady go for the rest of the year, or are there other catalysts to look forward to?
Well, I guess just to comment on the halving real quick, because it is a controversial topic. The age-old debate is the halving priced in, is it not? And it's an understandable debate and criticism of people that point to the halving as this fundamental catalyst because, the sample size is 3, right? It's the 4th halving. Um, And theoretically, this is a node event, and for something to be a catalyst in either direction, there needs to be some kind of information asymmetry. And so if it's literally in the code and everybody knows about this coming, it should inherently be priced in. However, as with the rest of crypto, one of the core um, attributes of investing and trading in crypto is that you get to leverage information asymmetry, right? In public markets, there are agreed upon metrics. Everybody's looking at the same thing. There are requirements in terms of information dissemination. When it comes to Bitcoin, I mean, there are people with very large brokerage accounts that are just learning about the halving. I mean, I'm hearing ads on TV and podcasts and whatnot about the Bitcoin ETFs, and that's coupled with the halving happen. And so I think it's a little more nuanced. Obviously there is a fundamental improvement in flows. That's there's no doubt about that. But with each subsequent halving, that improvement is marginal. But I think it's really the information asymmetry and the fact that the narrative behind the halving can really pour gasoline on what is already a fiery macro environment, right?
Yeah.
And I think you had a second question, but I'm actually not sure what that was.
Well, I mean, I think it flows nicely into. I mean, I think that's kind of where we're at. Is you've got a little smoldering fire already because of the ETF excitement around money going into Bitcoin. Now you got the halving narrative that a lot of people didn't even think was happening, maybe because we didn't have time to really be talking about it in the media because we're already covering the ETF approvals. And now you got the next slide, which is basically this excitement around Bitcoin DeFi and everything else that's happening in Bitcoin now on top of those two narratives we just discussed. However, if I can play devil's advocate here, Sean, I think that there's a piece of this that does have the Bitcoin community split because right now you've got Bitcoin fees spiking. So what it was known for, i.e. being digital gold, you got a lot of people who are pissed because they're like, hey, I can't even send my Bitcoin right now. It's too expensive because people are building runes and ordinals, aka kind of like NFTs and things on Bitcoin now. So how do you kind of look at maybe how it could still be a good thing? Obviously, miners are very happy because they get paid right when their mining reward fees were just cut in half. But what do you make of, I guess, what that does to this narrative?
I think if you can afford block space, you have every right to that block space. One beautiful thing about Bitcoin is that it is truly in the market for block spaces, that is a truly free market, unencumbered by any kind of government or regulatory body. And I think that in terms of the high cost of sending transactions, obviously that's going to be it's always going to be a controversy, right? But it's a controversy in both directions. If you back up 18 months ago, people were concerned about transaction fees being too low, and with the block subsidy, asymptoting toward zero over the next 140 years, people were concerned about the security budget for Bitcoin. So which one is it? I think at the end of the day, you have to remember that Bitcoin isn't trying to be Visa. That's not what it's built to, at least in my view, built to serve as. It's really a settlement layer, and it's for large transactions. And in my view, it's more akin to like a settlement layer, like a FedNow type platform, where and people that want to send a few dollars denominated in Sats to somebody will use a layer 2 network. Whether that be Lightning or Stacks or some other L2 that is launching soon.
Yeah, I mean, when we think about maybe how to play it, right, as investors, I think it is interesting to think about. I was watching your talk yesterday, and you're saying like, look, you want to play the casino here, because I think that's like a lot of what's happening with runes and ordinals is kind of a casino, and it's good for the miners, and so you could just bet on them if you really wanted to. In fact, I think you had a call earlier this year that now might be a good time to put some money in Bitcoin miners, and they've kind of shot up a little bit since then. We've seen at least one upgrade on Hut 8. So I'm curious to hear your take on the Bitcoin miners here, because if that trend continues, regardless, I think it's kind of a good place to have your money.
Yeah, I think a lot of people have been frustrated, people that just got into the market starting in January, because Bitcoin has performed remarkably well, but miners really have lagged, and people are accustomed to miners, offering this beta to Bitcoin, and I think that people need to understand that miners, unlike Bitcoin, which behaves as a pure commodity, it's a digital commodity. Really, all that matters is supply and demand. Miners are more rate sensitive, right? They have a cost of capital, they have refinancing risk, and they will, underperform Bitcoin when rates are going up. And in the year to date period, we've had quite a surge in long rates and the dollar, and that, in my view, is what has been heavily weighing on these miners. We also had a couple of miners that took advantage of the massive rally in Q4 to issue new equity, which is a prudent decision for anyone managing a balance sheet and should, in the long term, serve these miners well. But certainly in the near term, does not help price. And this chart you just brought up is a pretty good representation of the dynamic that I was just talking about. Below, up top, we have WGMI, which is a Bitcoin miner index that is charted relative to Bitcoin price. And at the bottom, we have the US 2-year yield. Now, obviously, not a perfect relationship, but broadly speaking, you can see that as yields go up, miners generally underperform
Mm-hmm.
Bitcoin. It does not necessarily mean that they're not performing well, but they do underperform. And then when yields are rising, when your yields are going down, generally miners are outperforming.